at Siddell's with us, CEO, Chief Investment Advisor, EGSI Financial. Thank you for being with us. How do you feel about the market? And look how we're selling off throughout this day. What do you attribute this sell-off to?
Well, I think it's there's a lot of anticipation on Powell's comments this week, and depending on his comments, because sometimes they're not what everyone's expecting. I think it's going to have a huge determination on the outcome of the market. With the jobs numbers coming out being revised downwards so much, over 800,000 jobs, I think Powell is playing catch up again, just like he did with inflation. And, he's going to have to lower rates. I think it's going to be at least 50 basis points. I really believe that. And the market's going to rally after that. But they really want to wait and see what Powell's comments are going to be.
That's interesting. So you feel pretty certain about the 50 basis points because, there's the argument as to why there shouldn't be 50 basis points. What do you tell those folks? Why is 50 the right amount?
Well, you know what? The revision of the jobs numbers, really just reaffirms what we've been saying. That we've been in a rolling recession for a long period of time, especially when it comes to manufacturing and housing, and the disparity between Main Street and Wall Street continues to grow. So, in order for Powell to leave the legacy that he's been wanting, which is have that soft landing everyone's talking about, he's going to have to lower rates and make a big push to lower rates sooner rather than later. My argument is if the numbers were accurate all along, he would have been starting the round of quantitative easing, at the last meeting, if not sooner.
So at this point, assuming you're getting probably what you're expecting, certainly some cuts, how does the market react, do you think, going forward? Because right now, sorry to interrupt, we're down almost 300 points on the Dow ahead of this.
Yeah, there's going to be some profit taking, after the rally. We had that huge rebound after the carry trade issues in Japan. And so this is, it's expected. We're going to continue to see a lot of volatility, but I think we have a very narrow window between now and the election. And, the market is going to react positively when Powell lower rates, even if it's just 0.25%. But if we get that full 50 basis points, the market's really going to rally between now and the election. But the election is really going to determine what's going to happen in the markets going forward.
And at this point now, what about some of the other things, such as gold, oil? How do you feel about some of those commodities?
I love commodities. I've been a big fan of commodities over the last couple of years. Even though oil has been down, obviously it's coming back up a little bit. Gold, I know people are saying that by the end of the year, it's going to be 2,600. I think it's going to be north of 2,700 by year end, again, depending on the outcome of the election. But, I like commodities, big fan.
Yeah. Yeah, it's interesting. As I look at the market here, and you do think that commodities, for example, you mentioned gold heading higher, what's the takeaway here for the consumer, housing, the behavior? Because if the consumers get spooked and they don't spend, that'll kill GDP, and then you have a recession.
Well, absolutely. And we're already starting to see that. Consumers are already starting to spend less right now. When you look at credit card debt, it's over $1 trillion. Savings rate is down. So people are already starting to pull back more and more. We're seeing that through different cruise lines and airlines. The bookings are not as far out as they were for flights, just last quarter. So we're already starting to see the slowdown. And in order for us to have a soft landing, there's a couple things that really need to happen. And that is, reduce government spending, lowering taxes. And when we saw, I think everyone is a little nervous when we saw Harris's proposal for taxes, and that's really making people kind of, sit on the edge of their seats right now. So everyone's trying to wait to figure out what's happening, and that tipping point is really going to be Powell's decision to lower rates and how much and how often between now and the end of the year.
How much do you think markets react to the election season? Between now, November, January.
The big thing is when Harris's proposal to raise the corporate tax rate from 21 to 28%, to also tax unrealized gains, that has a huge negative effect, not only on the markets, but the economy as well. So, that when you're trying to spur on economic growth, that is not the way to do it. There's three things that we need to do, and those are two, it's opposite of those two things right there. What we need to do is lower corporate tax rates. We need to get rid of regulations and reduce taxes on the middle class and the working poor, because the working poor, that grow, it continues to expand all the way through the middle class right now, and people are having a really hard time just meeting their bills at the end of the month, which is why credit card debt has gone so high.
Yeah. Ed, it's great to see you. Ed Siddell,
Thanks for having me back.
EGSI Financial. Thank you.